Palladium is now trading back above at 975 US dollars per ounce. Crude oil has broken out above 75 US dollars per barrel. Gold right now is trading above 2,034 US dollars per ounce. Silver has almost surged back towards 23 US dollars per ounce, and platinum is currently trading back at 920 US dollars per ounce. Back-to-back opportunities over the last week to swoop in, buy low, and now of course we're taking the opportunity to bank into strength on this impulse move that we're seeing right now across multiple commodities. So far this week, we've banked 1,000 points profit with our clients at the Gold and Silver Club. So of course, you know the calculation, but just in case you don't, for every one lot contract you'd be trading, that's going to be $10,000 of profit. For every 10 lot contract you'd be trading, that's 100,000 US dollars of profit. All very straightforward opportunities to capitalize on over the last week. So as you know, we've been banging the drum here across multiple commodities, metals and energies. There's massive buy opportunities to be had here every time we're retesting back down towards the swing lows. So oil so far this year, every time we've dipped back down towards 72, 71, 70 US dollars per barrel, it's been nothing more than a massive buy opportunity. Hedge funds and money managers, they're all positioned wrongly on this market. They came into the beginning of the year selling heavily on the sell short side, and what we've seen is many hedge funds, they've been liquidated as we've seen oil prices surge back above 75 US dollars per barrel, over a 500 point breakout just within the last week and a half here for crude oil. Now alongside that, we talked you through big opportunities on palladium and platinum back down towards $900 per ounce. The question is, which one will hit 1,000 US dollars per ounce quicker? It seems like palladium now is the hot contender for that. Palladium, nothing more than a massive buy opportunity back down towards 900 US dollars per ounce. Whether you bought at 900, 910, 920, 930, it doesn't really matter, because now we've got palladium surging to the upside, almost back at $1,000 per ounce, now trading back at $975. Very simple opportunities to capitalize on here. In the last week on palladium, again, we just banked 500 points yet again with our clients at the Gold and Silver Club on this market. Very fast opportunities to capitalize on this slingshot move higher. Alongside that, platinum is starting to build that momentum. There have been multiple opportunities last year, this year, to be buying into platinum if you're patient, sub $900 per ounce. Interestingly, yet again, all the hedge funds, money managers, speculators in the market, they've been rugged on this market. They came into the year buying heavily into platinum at the wrong point in the cycle at the start of January. Platinum since then broke down over $100 or 1,000 point move. If you've been smart and patient here with ourselves at the Gold and Silver Club, we waited for the price action to come to us, breaking back down towards $900 per ounce, and then we've stacked into this trade at the swing lows. Even at the start of this week, as we identified with you on the week ahead commodity report, massive opportunities on silver down towards 20 US dollars per ounce. We actually added another trade on silver at the start of the week on Monday when it dropped 2% to the downside. Again, retested the swing lows, big buy opportunity there. Silver has broken out 2% into the middle of the week here. It's already trading back above $22.75 per ounce. Even if you've been buying recently at $22.50 per ounce, those trades are also nicely in profit. And as you know, last week as well, we sniped into gold, got another position on at 2005 US dollars per ounce. That trade is now up almost 300 points just within 1 week. Now, I'll put some major news items on the radar that could be catalysts here for explosive moves. Very simply, we're going to use the liquidity and the higher volumes that you get off the back of these central bank news items to exit further profits. We'll use this for exit liquidity. So on Thursday, we have the European Central Bank. It is very common after a European Central Bank news item to see profit taking. So be aware of that. We're taking the opportunity in the middle of the week here to start scaling out banking profits. As I've mentioned, we've already banked 1,000 points profit with our clients over this week so far. So I'm not being complacent here at all on the breakouts that we're seeing on multiple commodities. We're taking the opportunity on the breakouts, the upside, to scale out of further profits. And of course, if we were to see further rotations lower on profit taking later on this week and into next week, nothing more than a fantastic opportunity to come back in lower and reload positions where we've been banking the whole way along. Then as we go into next week, we have three major news items that you want to have on the radar. Wednesday, the FOMC statements. We'll be hearing from the Fed regarding US interest rates. Thursday, we have the Bank of England. And then Friday, we have non-farm payroll data. So again, all of these are going to be catalysts to take advantage of the huge volumes that go through the market. Technical analysis does not work. We hear day in, day out from traders out there who are getting chopped up just trading technical analysis. It does end up being death by 1,000 cuts. Market makers, brokers, hedge funds, money managers, they all know how technical analysts are taught. So they know where the setups are, where the technical analysts are going to have their stop losses in the market, and therefore these levels are going to get constantly run and chopped up. We see it day in, day out. We hear from many of you who switched over from technical analysis to trade the correct way, the research-driven approach in the market, particularly for commodities. This is where you want to be utilizing data, statistics, market intelligence. Further compound that with the capital flows in the market, intermarket correlations, the ratios, then learn the real-time data-driven cycles for each commodity. So the daily, weekly, monthly, and quarterly real-time data-driven cycle. Further compound that as well with the macroeconomics, the fundamentals, the geopolitics, and of course how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. This is going to help you massively with your sniper entries, entering in at key areas of liquidity, and also knowing when to utilize catalysts in the market such as central bank news items for exit liquidity. So all of this is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.